Welcome to the deep dive. We're here to sift through complex info and pull out what really matters. Today, we're jumping into the energy world, specifically India's rapidly developing scene. The finances of the big players there can tell us a lot about wider trends. And our mission, well, it's to take Reliance Power Limited's Q1 FY26 results, all those dense financial statements, press releases, monitoring reports, and boil them down for you. We want to pull out the key takeaways, maybe some surprising facts, and really connect the dots so you get a clear picture of what these numbers mean for the company and the power sector overall.
Exactly. And to do that, we've really dug into the main sources. We've got the detailed financials for the quarter ending June 30th, 2025.
Yeah.
Then there's the media release, which gives their highlights, and a really important monitoring agency report about how they used funds from a preferential issue. That gives us the groundwork.
Okay, perfect. So let's unpack this. What are the headline numbers? Give us the big picture for Reliance Power in Q1 FY26.
Right. So for the quarter, total income came in at Rs 2025.31 lakhs. That's Rs 2025 crore, or about 236 million US dollars.
Sure.
Revenue from operations was 1,088,558 lakhs.
Okay. And how does that compare? Are things trending up this quarter?
Well, not quite across the board. These are solid numbers, sure, but
Sure.
total income and revenue were actually a bit lower compared to the previous quarter, Q4 FY25,
No.
and also slightly down compared to the same quarter last year, Q1 FY25.
Interesting. Okay, but what about the bottom line? Profitability. Did they make money?
Yes, they did. Net profit was Rs 4,468 lakhs,
Yeah.
so roughly Rs 45 crore, or about 5 million US dollars. And this is actually a pretty significant turnaround from Q1 last year, where they had a loss of nearly Rs 9,800 lakhs. So strong year-on-year improvement.
Okay, good year on year. But you mentioned a comparison to Q4.
Right, and that's where it's different. That profit is actually quite a bit lower than the profit they posted in Q4 SY25, which was over Rs 12,500 lakhs.
Wow, okay.
And their recorded EBITDA for this quarter was Rs 565 crore, or 66 million US dollars.
That is quite a swing downwards from Q4 then, even with the good year-on-year comparison. What's behind that dip? Higher costs, maybe.
That seems to be the main story, yes. If you look at the consolidated statement, you can see some expense lines creeping up compared to Q4. For instance, fuel costs rose quarter on quarter to Rs 93,573 lakhs.
Okay.
And finance costs also ticked up to Rs 42,587 lakhs. So even with revenue only slightly lower, these rising costs seem to have squeezed the profit margin compared to the previous quarter.
Right. So those cost pressures are definitely something to watch. It tells you a bit about their immediate health, their trajectory right now. But moving beyond just the financials, for a power company, how the actual plants are running is crucial. What's the story there?
Yes. Operationally, they look very strong. Their big plant, the Saison Ultra Mega Power Project, that's the 309 head 60 mil DU1, hit a plant load factor, or PLF, of about 91%.
91%. That's really high.
It is. And what's more, they emphasize it's been ranked the best operating power plant in India for 7 years straight.
7 years. That's quite a claim.
It is. And their other major plant, the 1200 mil UW Rosa plant, also showed really high availability, around 97%.
Okay. Best operating plant for 7 years. That's impressive consistency for such large thermal units. What does that actually take? Is it just maintenance or something more?
It's definitely more than just routine maintenance. I mean, achieving that kind of PLF and availability consistently. It points to really optimized fuel management, probably very proactive technical oversight, and likely effective power purchase agreements too, ensuring there's always demand for the power they generate.
Right.
So these are just abstract numbers. High efficiency means they're maximizing their output, getting the most value from those assets. It shows, a really solid operational core.
Okay, strong core operations. Now let's pivot a bit because the energy world is changing fast. What about the green side? Any moves there?
Oh, definitely. This is a pretty major development, actually. One of their subsidiaries, Reliance Energies,
Yeah.
they received a letter of award from SJV Limited, and it's for what they're calling India's largest ISTS-connected solar plus battery energy storage system project.
Largest. Okay, tell me more. What kind of scale are we talking about?
It's big. The headline capacity is 350 milligaud.
Yeah.
But to deliver that, they need to install 600 milligaud of solar DC capacity, and crucially, 175 milligaud, 700 milligaud of battery energy storage system, BESS.
Oh, 700 milliwatt of storage. That's substantial. And the price?
They secured it at INR 3.33 per kilowatt hour through competitive bidding.
So what does landing a project like this mean for them strategically? in the Indian market.
Well, they're claiming this solidifies their position as India's largest player in the solar plus BSS segment.
Yeah.
They report having 2.4 GW of solar DC capacity now and over 2.5 GWh of BS capacity in their portfolio or pipeline.
So it's not just dipping a toe in, they're really going for leadership in this specific niche.
Exactly. It feels like more than just adding renewables. It's a strategic bet on combining solar with storage, which is critical for grid stability as India adds more intermittent renewables.
Right, it's about firm power, not just when the sun shines. That could open up different revenue streams too, like grid services.
Potentially, yes. Things like grid balancing, peak power supply. It aligns very well with where India wants to go with its energy mix. It's a smart strategic move, aligning with national goals.
Okay, very interesting. Now, connecting this back to the finances, how does all this fit with their balance sheet managing debt, especially given that preferential issue you mentioned earlier?
Right, that preferential issue is key context here. So just to recap, they issued convertible warrants. Think of them like options for specific investors to buy shares later at a set price.
A way to raise capital in stages.
Precisely. The total issue size was aiming for about Rs. 1,524 crore. They issued 46.2 crore warrants at Rs 33 each. Now, during this quarter, Q1 FY26, some of those warrants were exercised, about 11.88 crore of them, and that brought in Rs 392 crore in cash for the company.
Okay, 392 crore just in Q1.
Yes, and if you look at the total raised from this warrant issue since it started, as of June 30th, it stands at Rs 694.65 crore. And interestingly, about Rs 49.5 crore of that came in this quarter from an entity called Basera Home Finance, which they note is a non-promoter entity.
Got it. So capital coming in, how does that impact their debt levels? Are they deleveraging?
Well, the company highlights in their release that their debt-to-equity ratio is among the lowest in the industry.
Mm-hmm.
The standalone financials for Q1 show that ratio at 4.43, which, on the face of it, seems pretty healthy.
Okay.
They also noted that total debt servicing paying principal and interest in Q1 was Rs 584 crore, about $70 million US.
And the crucial part, how are they using the money raised from those warrants? Did the monitoring report shed light on that?
It did, yes, and this is important for governance. The monitoring agency and the board both stated there were nil deviations from how they said they'd use the money.
Okay, that's a good sign. So where did the money go, according to the report?
It was allocated across three main buckets. First, expansion of business operations. To date, they've used Rs 169.66 crore for this, but only a tiny amount, Rs 0.12 crore, was used in Q1 specifically for connectivity charges related to the renewables business. The original plan earmarked a much larger Rs 803 crore for expansion overall.
So slow deployment on expansion so far from these funds.
It seems that way from these specific proceeds. Second bucket, debt reduction. They've used Rs 151.06 crore to date for this, aimed at reducing debt from Reliance Infrastructure. But interestingly, none of that was utilized in Q1 FY26.
Huh. So no debt paid down using these funds this quarter?
Not in Q1, according to this report on the preferential issue proceeds. It might have happened in earlier periods, or maybe the payment schedule is different. The original allocation here was Rs 340 crore.
Okay, and the third bucket?
General Corporate Purpose, or GCP. They've used Rs 347.44 crore for this to date. In Q1 alone, they used Rs 22.89 crore. The total allocation allows up to about Rs 381 crore for GCP.
And what falls under general corporate purpose in this case for Q1?
Good question. The report breaks down that Rs 22.89 crore for Q1. The biggest chunk, Rs 19.27 crore, was intercorporate deposits. Specifically, Rs 7 crore to Dursa Solar Power Private Limited and Rs 10.65 crore to Samalkot Power Limited, both related entities, it seems. Right. Then there were statutory payments of about Rs 3 crore and professional fees of about Rs 6 crore.
Okay. So some funds moving between related companies there under GCP. What about any unutilized funds?
Yes. As of the end of Q1, there was still Rs 26.49 crore left unutilized from the proceeds received so far. And the report says this money is just sitting in fixed deposits with banks like Canara Bank and HDFC, earning interest between about 5.25% and 6.3%. Maturing between mid-2025 and mid-2028.
So overall, the picture is one of careful, audited deployment of funds, even if the pace varies across categories. It gives you a sense of their financial management, definitely.
Exactly. Seeing how they raise and allocate capital tells you a lot about their priorities and financial health, all under the auditor's watch in this case.
But, it's rarely just positive news, especially for complex companies. Were there any significant challenges or maybe red flags mentioned in these reports for Q1?
You're right, there are always complexities. One area highlighted concerns a subsidiary, Rajasthan Sun Technique Energy Private Limited, or RSTEPL.
Okay, what's the issue there?
Well, RSTPL has defaulted on loans and has been making losses. The auditors note this creates a material uncertainty regarding its ability to continue as a going concern.
Going concern. That's auditor language for doubt about whether the company can survive long term, right?
Essentially, yes. It means there's significant doubt, although the accounts are still prepared, assuming it will continue. It's a flag. There's also a legal fight. An electricity tribunal, APL, had granted RSTPL compensation for issues like lower solar radiation. But the counterparty, Punjab State Power Corporation, took it to the Supreme Court, which has put a stay on that order. So that compensation is uncertain.
So, a subsidiary facing financial distress and legal limbo, does that impact the parent, Reliance Power?
The report states the parent company isn't directly affected by the going concern issue itself, and the group believes it can cover liabilities by selling assets if needed. But it's definitely a point of concern to watch.
Okay, noted. Anything else? You mentioned Samalkot Power earlier regarding intercompany deposits?
Yes, Samalkot Power Ltd, or SMPL, is involved in another significant issue. A lender has demanded payment of US $184.89 million. That's over ours, 4,700 crore.
A huge amount.
It is. And they invoked a guarantee supposedly provided by the parent company, Reliance Power.
Oh, okay, so a demand on the parent.
Potentially. But SMPL disputes this entirely. They've initiated arbitration against the lender in London, arguing that no debt was actually due as of June 30th. And the parent company has also told the lender that since no debt is due and there's no default by SMPL, the guarantee cannot be invoked.
So it's heading towards a major legal battle and arbitration.
Looks that way. It really highlights the complexity, doesn't it? You have these positive operational results and strategic moves into renewables, but at the same time, you're dealing with these significant legacy issues, these complex legal and financial challenges with subsidiaries and lenders. It's a balancing act.
Absolutely. These disputes are a critical part of the full picture, not just the headline profit numbers. So let's try and wrap this up. Reliance Power in Q1 FY26. It seems like a story with two sides. On one side, really solid operations in their traditional thermal plants, a very bold and significant push into solar, plus storage, and active financial management, raising capital and deploying it.
Exactly. Strong core, future-facing strategy, financial maneuvering.
But then the other side reveals these ongoing, quite serious legal challenges with subsidiaries, potential large financial obligations hanging in the balance from guarantees and disputes.
That's the dual narrative, precisely. And hopefully this deep dive helps you see that balance. Whether you follow the energy sector, corporate finance, or just want to be informed, it really shows how companies, especially in transitioning industries like energy, have to juggle optimizing what they have, investing in the future, and managing these often complex liabilities from the past.
Right. So here's a final thought for you to chew on. We see Reliance Power performing strongly in traditional energy, making this huge bet to lead in solar plus storage, but also wrestling with these big legal and debt issues. What does this mix, this blend of legacy strength, future ambition, and ongoing challenges tell us about what it takes for energy companies to survive and transform today? And how might all these different threads affect Reliance Power's long-term stability and maybe even the wider Indian energy landscape? Something to think about.